I think that's exactly right, Michael. If you were to ask me in advance, like, what would be the natural place for the rally to halt or take a break or take a pause or even end, I'll let you know tomorrow. This would be it. Because whether or not people want to believe in technical analysis or not, the algorithms are written in large part based on price signals more than anything else. So totally unsurprising. I would point out if Apple were flat or even down today, it would be a much, much different situation. We'd be talking about a significantly worse day because Apple continues to grow in importance and in market cap proportionate to the overall market and all of the major ETFs and averages. So I would just throw that out there. Energy being strong is not necessarily a great thing for the overall tape, not necessarily great for the overall narrative that inflation is about to miraculously disappear. I wouldn't get too excited about that. And what we heard from Walmart and Home Depot has been very heavily interpreted as being bullish, but most of it really, to me, was not bullish, especially when looked at in conjunction with what we're seeing on purchase applications, mortgage applications, home sales. Those numbers are now starting to go from being lower to what we would refer to as plunging. And I know that the last 2 years are really good years, so weigh it against that. But the comps were hard, but these numbers are now awful. And I personally think there's a very big multiplier effect coming from the housing market that is now going away at the same time the Fed is tightening financial conditions.
Right. Well, I would say whether people are interpreting the Walmart and Home Depot numbers as bullish or just maybe unsurprising, and obviously housing, without a doubt, a big locomotive for the overall economy and something that we have to sort of reckon with what the impact's going to be. But all of that in the mix at the same time that the Fed minutes hit. Now, I mean, the Fed minutes, right? It's weeks old. It gets a little bit massaged maybe along the way and gets released. But clearly the market didn't find anything newly concerning in there. And I wonder if it's because there was at least a nod in the direction of, well, we are aware of the risk of over-tightening. We are aware of the fact that, financial conditions are, when they tighten, they operate with a lag, and some parts of the economy have slowed down. And so, therefore, maybe the market hasn't been completely off base in looking at the horizon and saying at some point the Fed, eases its foot off the brake a little bit.
I think two things will happen at the same time, and the market will have to get comfortable with both of these. By the end of this year, the Fed will probably be done with tightening, and the reason why won't be because inflation is back to their 2% target. It will be because the economy is crying uncle, and the stock market probably along with it. So that doesn't mean we have to have a recession, but it will be apparent that the Fed has gone very far in their tightening cycle in a very short period of time. Remember, what we're accustomed to in the last 25 years is 25 basis point moves. We're doing 75s, and now we're going to do 50s, and that is just not something that most people trading have seen. You have to go back to 94 to find the last 75 basis point move. That's 30 years ago. Right? So this whole experiment in how quickly can we normalize policy in response to ugly inflation readings, we don't know how it ends. But while they are acknowledging that they might be doing more damage than necessary to the economy, simultaneously, you're going to start to hear stuff from the Fed about how 2% is not really that important anyway. And maybe we should really be thinking about inflation on a continuum. And maybe the right number is 3% or 3.5% or between 3 and 5 in the context of the economic growth, blah, blah, blah. That's the next thing that's going to start to happen. And I think the market can handle it. But that's a sneak preview of what you're going to see between September and year end. And I think it's going to be a wilder ride than what we've experienced this summer.